Along the Florida coastline, a 30-year-old residential condominium looks like a quiet slice of paradise. But beneath the pristine balconies and ocean views lies a complex, highly regulated web of shared collective risk. That abstract risk becomes an immediate reality when a heavy metal pipe fitting on a hot water heater violently ruptures. Hundreds of gallons of water cascade down through the floorboards, completely obliterating the ceiling drywall and the expensive hardwood flooring by Unit 402 directly beneath it. In a multifamily building where everyone shares the physical structure, this scenario forces a specific legal question. Exactly who is legally and financially responsible for cleaning up this destruction? When liability is left to chance, a single localized leak can trigger years of litigation between neighbors and insurers, stalling critical repairs while the physical structure continues to deteriorate. To prevent this cycle of neglect, Florida law dictates exactly how these buildings must survive. The state enforces uncompromising legal boundaries, mandatory structural checks, and strict financial protocols. Looking back at our flooded units, Florida law functions on a strict system of risk allocation to figure out exactly who pays for the wreckage. This diagram breaks down legal boundaries. Glowing blue shows the master policy must cover structural framing, perimeter drywall, and common utility pipes. When it switches to stark red, notice Florida law excludes floor coverings, interior paint, and appliances. Those fall onto the owner's HO6 policies. To ensure the association has the funds to cover its side, the board cannot simply guess the building's structural replacement value. They are required by law to hire an independent third-party appraiser every 36 months to set precise coverage limits. By forcing owners to insure their own custom floors and personal appliances, the law effectively cordons off liability. One resident's failed water heater cannot drain the collective insurance funds meant to protect the entire building skeleton. While the water is still actively flooding, the association's board does not have time to wait for Unit 502's owner to come home. Florida grants the board an irrevocable right of access, allowing them to immediately enter the private unit without permission to stop an emergency that threatens the wider property. Once the immediate water threat is stopped, the focus shifts to the building's overall physical health. Because our tower is 3 habitable stories or higher and has reached 30 years of age, it triggers a mandatory state requirement known as the Milestone Structural Inspection. This flowchart illustrates the 2-phase process. Phase 1 is a visual check. Finding structural distress triggers Phase 2, destructive testing, like concrete core drilling. Once the final report arrives, a strict clock starts. The association has 30 days to deliver a summary to every owner. Alongside this, the state also mandates a Structural Integrity Reserve Study, or SIRS, every 10 years. This non-waivable visual inspection of critical components like the roof and load-bearing walls establishes a mandatory baseline funding plan for future repairs. In Florida, a building's structural stability is never taken as a given. It is a continuously tracked, legally enforced timeline designed exclusively to catch invisible, creeping failures long before they become fatal. If those engineer inspections or the flood cleanup uncover major structural damage, the financial costs to repair the concrete and framing are going to be massive. To manage spending, consider this budget chart. If a contract exceeds 10% of the annual budget, the board must obtain competitive, sealed bids from 2 vendors. However, a narrow exception exists. Contracts for legal counsel, CPAs, engineers, or architects bypass this bidding requirement. For the cash sitting in the bank waiting to pay for these projects, the law requires a Fidelity bond. This insurance policy protects the community from theft or embezzlement by covering the maximum amount of funds handled by the management company or any check-signing board member at any given time. These procurement and bonding rules act as an artificial immune system. They guarantee that collective funds are spent on competitive, necessary preservation rather than being drained by internal corruption or nepotism. Back at our coastal tower, the crisis is resolved. The damage is paid for by the legally correct parties. The building's skeleton is verified as safe by an engineer, and the repair contractors were hired cleanly through sealed bids. Across Florida, these regulations function as a mandatory operating manual for the millions of residents living in high-density environments. Shared living inherently means shared vulnerability. Without oversight, one person's neglected pipe or a board's failure to check a structural column can threaten the viability of the entire community. Florida's legal framework replaces individual guesswork with a mandatory schedule of inspections and funding, providing the transparency needed to sustain these shared buildings over decades of coastal exposure.